By Dr. Martin Davies, who is Managing Director of Emerging Markets and Africa at Deloitte. Thank you very much for joining us on our program.
Thank you very much. Good afternoon to you.
Yeah, well, let's talk about how these visits and investment would pay off for the benefits of both the continent, especially the countries where China is looking at investing, and how China itself would benefit.
Yeah, well, the Chinese call it a win-win partnership, but I think the key thing to break this down is looking at how has Africa benefited the last decade and a half. Arguably, I would say that China's very strong growth trajectory. Well, China's economy doubled in size in the last 8 years, from a $5.5 trillion economy to nudging over $11 trillion by the end of this month, the end of 2015. Now, what I'm saying here is, rather than moving away from sort of a big geopolitical statements you'll hear this week and big pledges of aid and loans and investment to Africa, arguably, and I would argue more importantly, has been China's very resource-intensive growth model as this economy's doubled in size, very much infrastructure-driven, fixed capital investment-driven, has been had a very inflationary impact on commodity prices, which is predominantly Africa's export basket to China. So I think it's very obvious that China has been underwriting African quantitative headline growth. But of course, as China's rebalancing, as its economy is slowing down, so is Africa's. And I think the challenge now for Africa is to reposition, start to diversify, and not be dependent entirely on commodity exports to China and other countries as it has been in the past.
Do you think then the West would be looking with keen interest how China is taking its route to help aid and develop the African countries in terms of their capital infrastructure development programs? And how do you think this is going to really get rid of the stigma that China is not playing according to the rules when it comes to investment, because it's flooding African countries with cheap fake products?
Well, there's two different stories. I think the Western reaction to China's very strategic engagement of the continent has certainly been there. We've seen a ramping up of aid. We've seen the U.S. initiative around Power Africa. And China, very simply, has had a very much of a hard engagement, i.e. building infrastructure in the continent, again, on the basis of soft loans, often commodity-backed loans, potentially problematic now with commodity prices as low as they are, and the serviceability of that debt. I think there was a geopolitical component this from a Western perspective. What you referred to in terms of cheap product, etc., into the continent is trade. China became Africa's, sub-Saharan Africa's single largest trading partner in sort of late 2008, and that trend has continued. What we're seeing now is the trade has dropped off, largely because of reduced commodity prices and also declining African currencies. It's more expensive to import, and that has hit trade quite dramatically. Has Chinese trade contributed to deindustrialization pressures in Africa? Arguably, yes, and South Africa most certainly so as well, I'd argue. But now the question is saying, well, how do African economies reposition, diversify, and really start to take advantage of this Chinese rebalancing with its own domestic economy, less resource intensive, more sort of consumer driven? Can Africa supply that? Are African economies geared toward that? Probably not. Maybe South Africa is an exception. But I think it's rather than sort of, as you allude to, many blaming China for Africa's domestic economic challenges, we should rather be a bit more introspective and look at our own challenges as homegrown rather than sort of outsourcing blame elsewhere.
All right, Dr. Martin Davies giving us his insight on the Africa-China relations and on the preface of President Xi Jinping visiting Zimbabwe, and he's yet to arrive in South Africa later in the week for the Africa-China summit. Well, for more